Hi, this is Kerry Artek with Wicked Stocks, bringing you an update in the TLT. This is becoming kind of a regular weekly thing, especially as volatility has kicked in. Both the U.S. dollar, the Treasury instruments, interest rates, tariff talk, the stock market. You can go through the list, right? This is the iShares 20-year Treasury Bond ETF, the TLT, the high volume Treasury Bond ETF correlation, a tradable instrument that allows you to basically trade the directional dynamic of the U.S. Treasury bond. And just a reminder, this is a 5-year descending channel top. It's dropping weekly. This week, the week of Monday, April 14th, 94.17. This is a 5-year bear trend in the TLT. In other words, a 5-year uptrend in long-term interest rates. Now, there's been a big pause really for the last, I'm going to go back to October of 22. I mean, yes, we've had these intermediate fluctuations, you know, where the TLT rises, interest rates drop, TLT drops, interest rates rise, just kind of minor fluctuations. But the emphasis here and the takeaway is the trend still remains one of progressively higher rates so long as we're below 94.17. That is for this week. It's dropping next week. I'll give you next week's number. I'll be doing these on a weekly basis as long as this is a very active instrument. Now, there is this intermediate channel bottom that I've also thrown your way over the last few months. And it's been climbing about 3 cents a week, 84.59 this week. We slipped into the 1% zone twice over the last, actually 3 times since January. This is a buy opportunity if you're trading the TLT. 84.59 is what I would call a base of midterm support within the confines of a long-term bear trend that continues to exist below 94.17. But near term, holding above 84.59 certainly allows recovery back to 94.17. In fact, you can trade that. If we close below 84.59, that's another story altogether, and I'll get to that in a moment. But as long as we're above 84.59, this is bottom picking territory. In other words, long-term interest rates, will hold steady in the interim over the next, well, we could fill this wedge out for the next couple of months where we're sort of battling it out between 84.59 and 94.17. If we close above 94.17, I'll get to that in a moment actually, but if we close below 84.59, that's a significant sell signal into the third quarter, and let's just take a look at that here. I did a little bit of research and was able to quickly uncover that there is this sort of 16.5% ratio in the TLT. A 16.5% move in the TLT is a representative of a full 1%, up to 1.25% move in the long rates. So if we close below 84.59 this week, you might throw in a 1% margin on that. I don't have that here, but basically subtract 85 cents from 84.59. That'll take you into the 83 handle, 83.70 something, I suspect. That would be a sell signal that I would expect to continue playing out over the next several months. This was probably a 3 to 5 month move. This could be a 3 to 5 month move, but I actually think it'll be more rapid than that. I think this will be entirely correlated with the tariff war that seems to be emerging and can grow even more pronounced, perhaps. We don't really know where it's going, but if it does become more pronounced, if it does become clear, what's happening here, and I have a U.S. dollar index video analysis as well, that as international investors, banks, etc., begin to dump the U.S. dollar, and they did in a big way last week, and they've been doing it really since January, and this is correlating with that. You've got interest rates are also climbing, if we close below 84.59, I don't want to get too deep in the weeds on the macroeconomics of all of this. I'm sure you know it. If we close below 84.59, it is 68 that I would expect. That is a full channel extension. We're sort of in no man's land here when we break 84.59. I could go back into the early 2000s on this, and I'm not going to right now. I think the actual low in the TLT all time is like 81. Actually, I will do that for us right now. I will go all the way back to the origins of this instrument, back to 2002, and you've got 80.51. But, if you recall, this is like a post 9/11, where, I don't see this as a significant low. In fact, I've done the correlation with the 30-year Treasury bond, and this is not a significant low area. This is why I'm ignoring it. So what I'm saying here is if we close below 84.59 this week, I am expecting bearish continuation over the next 3 to 5 months or sooner to 66.68, which is the kind of doubling the width to the downside of the channel that we find ourselves in right now. And 66.68 I think is a reasonable objective. That would represent a 21% move in the TLT, which, if we're doing the math correctly, would be about a 1.25% to 1.5%, probably closer to a 1.5% increase in interest rates in the long bond. And we're talking mortgage rates, 30-year mortgage rates. We're talking the 30-year U.S. Treasury bond as well that would likely climb roughly 1.5 points over the following 3 to 5 months if we close below 84.59. Until then, this is a two-sided play. You can buy 84.59 and sell 94.17. This is a tradable instrument, high volume ETF. Now for the upside. And we're not going to go there anytime soon, but if over the coming weeks we happen to recover nicely and close above 94.17, then I'm expecting 102.88. And so this is a situation where, yes, the 5-year trend would be neutralized, the 5-year bear trend in the TLT would be neutralized, but the question is, would we expect aggressive gains as we continue into later year? And I'm going to say not unless we close above 102.88, which is in itself will soon be a 2-year structure anyway over the next 6 months. So we'll just call this a 2-year channel top, respectable. I've said this before, that if we close above 102.88 this year yet, I think that's the indication for likely a global recession as the Fed then combats economic weakness with progressively lower rates. But closing above 94.17 does neutralize the 5-year bear trend in the TLT. And does provide a buy signal within a couple of months to 102.88. And we'll just take it from there. I think that pretty much rounds it out. I'm going to leave it at that for this particular Wicked Stocks video analysis on the TLT. You have a great week.